Well, turmoil in the U.S. stock markets continues. The Dow Jones today fell another 700 points, closed below 40,000 on the Dow. The Nasdaq fell 516 points. That's 3%, over 3%. Closed at about 16,307. The S&P fell 120 points, 2.25%. Closed at 5275. Again, the story continues to be, from my perspective, love to get your thoughts and your input. The weakening dollar, the sell-off in the U.S. dollar index. Today it sold off 70 cents and finished up at $99.38. We're not that far away from 98 handle on the U.S. dollar. And conversely, what happened to gold? As the dollar sold off, you saw gold get massively bought up. And this is not about being a gold bug or being a stacker. This has, from my perspective as a layperson, casual observer, this has deeper implications because these are not retail buyers. This is not, Joe Sixpack going into his coin shop and picking up a 10th ounce of a gold eagle or a tube of silver eagles or silver rounds. This is not retail buying. When you have, like we did today, a close on gold up $112 an ounce, now well over $3,300 an ounce for gold. This is massive buying by, from my perspective, other countries and other large institutions. It's not retail buying that's driving the price up this drastically, this fast on gold. Now, am I telling you to go out and run and buy gold or buy silver? No, because again, all it takes is for one positive story or the markets to interpret one positive story out of the Trump administration relative to tariffs or trade deals being reached across the world. And this trade could unwind. Leave your comment below. If you guys are in the gold market, do you think that gold is currently overbought, or you think it still has a long way to run? If you hold gold, type gold. If you hold silver, type silver. If you hold stocks, type stocks. A friend of mine this morning texted early on saying it's a great day to buy. And that was when the Dow was down about 220 points. And of course, throughout the day, it sold off. I never got an update from him as to what positions he took up and what happened to those today. Obviously, you take the loss, when you sell. But you have a bit of a catching a falling knife scenario here, whereas I shared last week on videos, I don't think anybody really knows, where the bottom is. Interestingly enough, today in the debt markets, you did not have what we saw last week, a massive last week's sale of U.S. Treasuries, which drove the 10-year bond yield up over 4.5%. Today, the 10-year bond yield was right about 4.28%. Late last week and early this week, you saw actually buying of U.S. Treasuries. Again, I'd like to get your thoughts. Is this buying by foreign entities and countries? Have they decided now all of a sudden the U.S. dollar is a safe haven again, while at the same time gold prices are running through the roof and the dollar value is declining? Or is this something, let's say, the invisible hand that has now decided that it's important to stop the bleeding in the debt markets and to start buying up U.S. debt? To shore up a catastrophe or unwind in this so-called carry trade. Again, I'll leave it to those that are following this stuff like I try to give me your impressions and thoughts. But for now, we have a 10-year bond yield that appears to be let's say, under control and more of a comfort zone, yet they cannot stop the sell-off in the dollar, and they cannot stop the run-up in the gold price. And, you could easily see $100 successive days in gold and even more. Just like we don't know where the bottom is for the stock market necessarily, do we really know where the top is for the gold market? I mean, who's to say that gold couldn't run quickly, to 4,000 and to 5,000 and beyond? And you've got guys like Peter Schiff out there saying that that's exactly what is going to happen. Again, not trading advice, financial advice, just giving you what I've been observing and what I'm seeing, what we're seeing unfolding every day. It is strange, okay? So the article I want to share with you today, now that I kind of gave you a summary or recap or my assessment of where the markets were at today and why, the story I saw that was, I thought, compelling to share was Jerome Powell was out and made some remarks today. CNBC put out a story just about 2 hours ago, 3 hours ago, that summarized his comments, and it kind of led me to the reason for the thumbnail title today, which is not good. And this is why. Powell indicates tariffs could pose a challenge for the Fed between controlling inflation and boosting growth. We've talked about before that the Fed has been in this catch-22 situation, and this could kind of be coming to a head pretty quickly. Powell's been out saying there is no Powell put for the markets, and that they're not going to be swayed by or persuade by a market sell-off. And the markets, right? The stock market people are praying, crossing fingers that Powell comes out, has an emergency meeting, cuts the rates, and resets everything to, let's say, allow the markets to get rejuiced up again. So far, it's not happening, right? So the Trump put has been pulled. The Powell put, if there ever is one, is certainly not alive and well right now. You used to always hear about the cavalry coming in at the end of the day before markets close to somehow miraculously get markets to close in the green. That right now is not happening. And we have a big paradigm shift, which we've also discussed, at length on this channel. So let me get to the article. It says, Federal Reserve Chair Jerome Powell expressed concern in a speech Wednesday that the central bank could find itself in a dilemma between controlling inflation and supporting economic growth. With uncertainty elevated over what impact President Trump's tariffs will have, the central bank leader said while he expects higher inflation and lower growth, it's unclear where the Fed will need to devote greater focus. So again, more uncertainty. Markets don't like uncertainty. You saw what happened. They sold off. He says, we may find ourselves in the challenging scenario in which our dual mandate goals are in tension, he said in prepared remarks before the Economic Club of Chicago. If that were to occur, he said, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. So it means they'll assess it and say, well, do we have a bigger problem with inflation or do we have a bigger problem with growth? And so, basically what you're hearing from Powell is they don't have a clue. They don't know what they're going to do. They're going to wait for this to, let's say, unfold further, which means potentially more pain for those that are in the stock market. The Fed is tasked with ensuring stable prices and full employment. And economists, including those at the Fed, see threats to both from the levies. In a question and answer session after his speech, Powell said tariffs are likely to move us further away from our goals, probably for the balance of this year, i.e. higher inflation. So folks, button down the hatches, let's say a strap in. Prices are not coming down. They're going to keep going up. Powell gave no indication on where he sees interest rates headed, but noted, for the time being, we are well positioned to wait for the greater clarity before considering any adjustments to our policy stance. That is not what the stock markets wanted to hear, okay? Because what that means is Powell's going to let the stock market continue to bleed off just as the administration appears to be willing as well. In the case of higher inflation, the Fed would keep interest rates steady or even increase them to dampen demand. In the case of slower growth, the Fed might be persuaded to lower interest rates. Powell emphasized the importance of keeping inflation expectations in check. Markets, it says, expect the Fed to start reducing rates again in June and to enact 3 or 4 quarter percentage point cuts by the end of 2025, according to CME Group's Fed Watch gauge. I think that is a fantasy at this point. Again, I'm not an economist, I'm an expert, but hearing what you're hearing from Powell, we haven't even seen the effects of these tariffs play out yet. You're just starting to see, from my perspective, the tip of the iceberg on what the broader impact is going to be. Powell noted, he said, that survey and market-based measures of near-term inflation are on the rise, though the longer-term outlook remains close to the Fed's 2% goal. He didn't say what the longer-term, he didn't define what longer-term outlook means. The speech was largely similar to one they say he gave and delivered earlier this month in Virginia. Powell noted the threats to growth as well as to inflation. Powell says the data in hand so far suggests that growth has slowed in the first quarter from last year's solid pace. Despite stronger motor vehicle sales, overall consumer spending appears to have grown modestly, i.e., meaning the credit card debt is growing modestly. In addition, strong imports during the first quarter reflected attempts by businesses to get ahead of potential tariffs. Those are expected to weigh on GDP. So we're going to have rising inflation. We're going to have reducing GDP. Please button up your financial hatches, guys. Work on getting out of debt. Work on having some cash set aside to the best that you can. Don't take on obligations right now that you truly don't have the full capability of paying for. You have to, if you work for somebody else, you don't have your own business, you've got to anticipate or at least plan for a job loss. If it's not yours, someone in your family that is a breadwinner, okay, that helps put food on the table. That's all we can do individually is to try to make smart individual decisions, because this stuff is totally out of our control, okay? So with that said, I don't want to go too long today. Yes, these videos, I know the content, there is overlap. There's some, we have some repeated topics. That's what's going on. We have a weakening dollar, which is not the trend that we've seen, over the past, let's say, many, many months. Now it's hitting hard. The dollar is falling like a rock. Gold is shooting up pretty quickly, and there's a lot of uncertainty out there. Okay. So with that being said, I will let you guys go. Been the last few days really tied up with a few new cases at my desk that required some emergency drafting and filing. So that's good, because like I think I said last week, my phone really has not been ringing that much. I've been hearing from people in my profession, the legal profession, and other professions as well, that business is slow. All right. With that being said, all of you have a great rest of your day today, and I'll talk to you soon. All right. Bye.